The 2026 WOTC hiatus. Why Arizona shop owners can't afford to stop screening. If you've heard that the Work Opportunity Tax Credit, WOTC, expired on December 31st, 2025, you've only heard half the story. For independent auto repair shops in Phoenix, Mesa, and across the valley, the current legislative hiatus is not a reason to stop screening. It is a reason to tighten your compliance infrastructure. Here is the operational reality of the WOTC hiatus in Arizona and what it means for your 2026 hiring strategy. What is WOTC? The basics for shop owners. The Work Opportunity Tax Credit, WOTC, is a federal program that rewards businesses for diversifying their workforce. It allows you to claim a tax credit against your federal income tax liability based on the wages paid to new hires who belong to targeted groups. Common WOTC-eligible hires in the automotive industry include veterans, including those who are disabled or recently unemployed, SNAP, food stamp, recipients, individuals aged 18 to 39 whose households receive assistance, long-term unemployed, individuals who have been out of work for 27-plus weeks, ex-felons, hired within 1 year of release or conviction. The financial impact. The credit is generally 40% of the first $6,000 in qualified wages, resulting in a $2,400 credit per hire. However, for certain disabled veterans, the credit can scale up to $9,600. 1. The program is in limbo, not gone. The WOTC is a federal program that must be periodically reauthorized by Congress. As of January 1, 2026, it is officially in a hiatus period. This has happened 13 times since 1996. Every single time, Congress has eventually reauthorized the program, often retroactively. 2. The Arizona DES is still watching the clock. The Arizona Department of Economic Security, DES, is still accepting WOTC applications, Form 8850, for technicians hired in 2026. While they cannot issue a final certification or a payout until Congress acts, they are date stamping every submission. The trap. If you hire a veteran or a SNAP recipient today and wait for Congress to fix the law before you file your paperwork, you will be denied. The 28-day rule is still in effect. If the DES doesn't receive your 8850 within 28 days of the hire date, that credit is gone forever, regardless of retroactive reauthorization. 3. 3 scenarios. Which one is your shop? Scenario A. The compliant shop. You continue screening and filing. Congress reauthorizes the program in 6 months. You receive a retroactive credit for every eligible 2026 hire because you hit the 28-day state deadline. Scenario B. The reactive shop. You stop screening during the hiatus. Congress reauthorizes the program in July. You try to file for your February hires then. Result: denied. You have permanently lost that labor cost offset because you missed the 28-day window. Scenario C, the unaware shop. You hire technicians without screening for eligibility at all because you didn't know the program existed. Over the course of a year, you hire 3 eligible veterans and 2 SNAP recipients. Result: you have effectively donated over $12,000 to the federal government in taxes that could have been legally offset. You are paying full price for labor that your competitors are getting subsidized. 4. Bipartisan momentum for expansion. Current legislation in Congress, improve and enhance the WOTC Act, aims to increase the credit from 40% to 50% of qualified wages, index the credit to inflation, expand eligibility to include military spouses. How Smarter Way to Apply protects your shop managing a hiatus requires an administrative discipline that most busy shop owners simply don't have. At Smarter Way to Apply, we act as your managed service provider, MSP, to ensure your workforce infrastructure remains always on. We handle the screening, manage the 28-day DES clock, and organize your documentation so that when the federal government flips the switch back on, your 2026 credits are already secured and waiting. Don't leave your 2026 tax strategy to chance. Stay compliant, stay screening, and let us handle the red tape. Disclaimer: WOTC eligibility and reauthorization are subject to federal legislation and state agency processing. This information is for operational guidance and does not constitute tax or legal advice.